start from the beginning just so that it builds a clear picture. And the first thing that I want to talk about is bias, and because trading is as much about the way that we think as it is about our entry technique, as it is about the support and resistance levels and the trend lines and the other patterns that we find. It's as much about the thinking. In fact, I'd say it's probably more about the thinking than it is about all of those other things. We think, we analyze, and we arrive at a judgment, we arrive at a conclusion, and after arriving at that conclusion, we try to execute our judgment and do that at a good price so that we can make a profit. That is the process or the procedure or the order in which things happen. And so a lot of my time as a trader is spent just developing a bias, and I have different ways of looking at the charts in order to develop that bias and different reasons for having it. Okay, and so I just want to go through that, because sometimes we're talking about support resistance levels, sometimes we're talking about trend lines, and sometimes we're talking about patterns, and what I wanted to highlight is that each of these are independent from each other, and sometimes you can have a different bias at a different place. Okay, and I'm just going to kind of try and demonstrate all of this to you on screen, right? So by way of example, if we take the Aussie chart, I think it's probably the best example right now. Okay, which is that I had drawn a lower channel line. Okay, I had a lower trend line. The price broke below that trend line. Okay, I also had a support resistance trend line which was drawn connecting the high here and the low here. Okay, and I just took a divergence on that trend line, and when the price was ranging over here, right, it's beneath my broken trend line and it's above my support and resistance line, right? I have to establish bias, right? So the bias would be that as long as the price remains below the trend line, from a technical perspective, I'm short. I'm short regardless of the fact, even if the price is moving higher. Right, so sometimes you see the trend line, and the way that price moves around that trend line is that it'll hit the line, it'll hit the line again, it'll hit the line again, and it'll just keep on hitting the line from the underside. Right, now, even if the price is creeping higher, the bias remains short, because the reason for having the bias was that trend line. You know, it was the cause. And the only thing which is going to change that is for the price to be above that trend line, which is what Aussie appears to be doing now. Okay. On a similar note, we had this support resistance trend line. Okay, and as long as the price remains above this trend line, then our bias remains long on the pair. Okay, it doesn't matter which trend line you chose in order to establish your bias. Each one of those would have got you into a trade, and each of those trades would have been profitable at least for a short while. Okay, so if you took the break, you were good for 40 pips. If you took the first retest, you were good for 50 pips. If you took the second retest, you were good for 25 pips. Alright, because I'm looking at an hourly, I'm just going to go on a 5 minute, and you'll see exactly what I'm talking about. Okay, so you see, right, that if you took the trend line break for your bias, you would have been in the money every single time, and each time you would have had a good, well-defined risk for your entry. So a 15 to 20 pip stop on the retest would have been good enough for you to enter into that trade, right, each time. And each time you could have a possibility to make XYZ number of pips off of that, right? Now, similarly, if you were taking this downtrend line for your bias, you know, as it came in for each retest, you would have had an opportunity to take a trade, right? And your bias would be to go long. And after you've established that bias, all you are looking for is the best entry. And you're saying, where's the best entry on this? Where am I going to be able to define my risk and reduce that to something which is within a very comfortable level, right? So you would want to be as close as possible to your trend line in order to take that trade, right? And so you can see on this chart that using that trend line, we established a long bias, a short bias, and we're able to execute that trade, and we're able to profit from it as required, right? Now this is a trend line, and you'll see me using trend lines a lot. I'm using the trend line to determine a change in the direction of the trend, and as well I'm using the trend line retest as an entry mechanism to help get me into a nice, well risk defined trade. Right now, this is one way of trading which we're using, and as well it is independent of everything else. Okay, so when you're looking at a trend line, right, do not be thinking about support and resistance. Do not be thinking about patterns. Do not be thinking about high-low breaks or any other entry technique. Do not be thinking about some tip or trick or some SR trick or hourly candle entry or anything like this, right? It is an independent entry technique on its own, regardless of everything else. So if I'm looking at this chart and I'm looking at these trend lines, I'm interested in how price behaves around a trend line, and I'm interested in using that to my advantage to try and make some positive pips. Okay, that's how I use the trend line. Okay, right. So Simon's asking if I would still be biased short because we are below a down channel. Okay, maybe I've seen that question too late because I think we're back in that channel now, right? So as long as the price remains below the trend line, as long as it remains below the trend line, it's a short bias. Above the trend line, that bias changes. All right. If it moves often above and below this trend line, then probably what this trend line is not a channel line, it's a mid pivot line, and we know how to deal with the mid pivots. Okay. Right. I see. Right. So we're talking about this now. Okay. All right. What would I use that trend line for? I would not use that trend line for bias short. Okay. I would not use that trend line for bias short. What I would use that trend line for is to get me into a long trade. Right. So if the price is moving up and you see, so this is a resistance trend line. It's a resistance trend line in an up move. Okay. And so if I see the price break above that, it gives me a pullback that will give me an entry north. Yeah, I would not use that trend line as a resistance trend line. Does that make sense? See, so this trend line is a completely different type of trend line. It's more like a support. It's like a support resistance trend line. In this case, it's a resistance trend line because it's holding the price from moving further north. Okay, but it would be the break of the lower trend line which would define a southerly trend in this particular instance. All right. Yeah, always prefer the pullback. Right. The pullback is going to give you the cleanest entry and it's going to give you the lowest risk. Right. So you can get in on that trade with 10, 15, 20 pip stop loss on the pullback. Yeah, on a break, you could end up with a 30 pip break above that level. You take an entry, you need to allow 30 pips, and you need to allow those 20 pips below that trend line, right? So it's all about being able to define the risk. If we can define the risk, we'll get good clean entries, right? Okay, right. So this is trend lines. Right, and this is how we establish bias using our trend lines. Right, so here this is another example of a support resistance trend line where the price broke higher, pulled back, and went, and so you'd be looking for the same thing again. But we're using these lines in order to establish bias. All right, and completely independently of any other strategy, right? Okay, completely independently of any other strategy. That's the important thing which I wanted to mention. So if we're looking at trend lines, if having SR zones and anything else on the screen confuses us or affects the perspective that we have, then we should just remove those things, right? So have 3 Aussie charts open, one on which you mark your trend lines, another one on which you mark your support and resistance levels, okay, and a third one for trading some kind of pattern setup or something like that, right? The price is back below the channel. Yep, the bias becomes short again, okay, right? Now remember, this is just bias, right? You have to consider how and where and when you would take entry on this now, right? And the fact that the price broke above and back into that channel, sometimes it can serve as a warning. Other times you could look at it and say, well, it's a good thing that the price couldn't hold inside the channel. But I like to see my breaks in and out of channels to be quite clean, right? So I'll sit this one out for the time being. I've not got a clean entry anymore because the price broke inside. The next time I'll be looking for an entry on this will probably have nothing to do with trend lines. Okay, if the price breaks back and heads into the daily open, right, then we had a short day yesterday, and so logic dictates that a short day should follow a short day. If that we had a small amount of momentum, if that's going to follow through with another short day today, then I'd want to see the price now kind of back below the daily open, right? Which really okay, since we're on the subject, may as well start talking about it, right? Okay, so trend line's gone, right? Another perspective for bias, all right? As you all know, I use the 6 a.m. candle to determine the direction of the day. So if the price is above that candle, I have a long bias, and if the price is below that candle, I have a short bias. This is something that we establish independent of everything else that we're doing. It's independent of our trend lines. It's independent of our support and resistance levels, right? And in itself, it doesn't usually give us an entry, right? But in tandem with something else, in confluence with a trend line or an SR level or something like that, we can take entry. We can take entry off of. It. So all we do is we incorporate that information into our trade, right? So currently, as it stands, the direction of the day is up, which means that it would be more natural to have a long bias than it would to have a short bias on a clean chart, right? But this is just something which we use for information when we don't really use it for much else on its own, right? With those trend lines back on the screen. Yeah, there we go. Put so many trend lines back on the screen. There you go. Right. Right. So with our trend lines back on the screen, what I'd be looking at is yes, okay. Got to get rid of some of these. Want to keep. Get rid of. Right. There we go. Right. So. All right, with the trend lines back on the screen, right, what I'd be looking at in order to go short on this really is a break back below the daily open, and as well a break below this trend line which was holding as support, all right, and I would need to see that turning to resistance, and that gives me a useful entry, okay. So that's how we use the daily open for bias, right? So remember, having a bias and trade execution are two separate things, and the way that we establish bias in each case is independent from the other, all right? Right, I'm just going to turn to Euro GBP, okay, and I'm going to, let's have a look. I think I'll need to remove some of these trend lines, okay. Right, on Euro GBP we had a support and resistance play, right, and what we saw was that we had support which turned to resistance twice as it happened, and again we had the support here, okay, and we had support here, support turned into resistance once, and the price broke down. Okay, so I mean, this is what we see going on. So we know that this is a support and resistance level. Okay, what happened next is that the price broke back above through that resistance level, pulled back and established support, and then it broke higher. Right now, when we see this formation take place, and if you go on the website and you watch the first video which I did about support and resistance, you'll see me working through Euro GBP, and you'll show me demonstrate this pattern 2 or 3 times where it's happened before. Right, but what's happened is that we've established support here now at the 87 level. Okay, now because support has been established at that level, from a technical perspective, we are long on this pair, right? As long as the price remains above 87. It doesn't matter if you take your entry here, or here, or here, or here, or here, or here. It doesn't matter where you take your entry. As long as the price is above 87, as long as it's above that support level, the bias on this pair, as far as support resistance trading is concerned, remains long. Right? That's bias. Obviously, execution is a separate thing. You need to be able to define your risk, which is why the best entry would be on a pullback near that 87 level. Okay, now if you guys just give me a second, I'm going to show you the chart. Right, I'm going to show you the chart for Euro GBP on Sunday night. Right, and so who did I send it to? I sent it to Vladimir, so it'll be my discussion with him. Alright, so I said watching Euro GBP would be good to see 87 hold, then can push for 87.80. Okay, everyone can see that? Just want to show it's showing the other programs as well, not just the MetaTrader. Yeah, okay, right, so this was the chart on Sunday night, okay, and we were looking for the 87 level to hold. Right, so what's happened there? Right, so we were looking for the 87 level to hold. It's a support and resistance setup. Trend lines have absolutely nothing to do with it. Okay, and so I was trading this instrument because it was a support or resistance trade. I was not trading it because there was a trend line. I wouldn't be bothered. Yeah, that there's I would not be bothered that there's a trend line. There's a trend line up. There's a trend line down. I wouldn't be bothered. Has the last trend line broken? Has it not broken? All of that would be insignificant. Right. So I could draw a trend line there. I could copy it down to there. Right, okay, and I mean you can see I had this chart here, right, at the beginning of this week, okay, and it's only yesterday that we've had a kind of clean break of that trend line, and then that kind of propelled the price much higher, right? So. So this is a setup. It's a support and resistance setup, and the thing that I wanted to highlight is that it is independent from everything else that we're doing. It's independent from trend lines. It's independent from a trend line retest. It's independent from the daily open. It has nothing to do with it. It's just that we know how price behaves as it moves through these levels. So we have positive expectation. We have a good risk-defined entry that allows us in and out of that trade and allows us to manage it in a very comfortable, risk-free fashion. Right? That's all that we're doing with it. Right? So this is the SR trade. Right? Finally, if we're not talking about SR trade and we're not talking about trend lines, usually the only other thing which I'm looking at are patterns, right? Price patterns, and I look for double tops, I look for double bottoms, regardless of the time frame that they're forming on. Sometimes that gives me a bias. I look for it's a very common pattern. It's called Three Indians. Which is like you can where you have it's that kind of pattern, okay, and usually when you get that type of pattern forming on a break, you get a very strong corrective move. It's very similar to pattern which we saw forming on gold. Okay, so you can see it there. Okay, if it was harmonic, it's also known as the three drives pattern, right? So people are looking for a certain fiber extension to be reached, but I don't use those types of measurements much. You can see how the pattern is developing, and that gives you an indication of what's going to follow, right? So I'm looking at the market structure. I'm looking at the way the price behavior is and how it's moving, and from that I'm determining, or I'm trying to gather some kind of positive expectation about what is going to happen next, right? And from that I will establish a bias, and once I've established my bias based on the pattern, regardless of what any support resistance level is saying, what any trend line is saying, I will trade in the direction of the bias that I have established. Okay, so the matter then becomes, right, that what happens if you've got a trend line. Okay, you know what happens if you've got a trend line, okay, and you've got a pattern, right, and you know, you've got some kind of support resistance level play going on, or what have you. You know, what happens in that instance? What you do, right? What you do is you take the one which is the cleanest, and you ignore the others, right? So sometimes you have SR play. It's telling you go long. You have a trend line says stay short, right? Whichever formation is the cleanest, that is the one that you take, right? And in any case, all you're looking to do is have a good risk-defined entry. You're not looking for anything much more than that, right? So that's how it stands, right? And these are the kind of strategies which we have. In fact, what I'll do is maybe I'll take a couple of minutes and I'll give you the most kind of common patterns, right? So so this is probably one of the most common patterns. It doesn't happen every day, okay, but always looking out for it. Another very common pattern is when you have a sharp drop and then the price channels backwards to the origin of that move. You can pretty much suspect that you're going to get a resistance at that level and a continuation of the move, right? We had something like that happen today on Aussie. Okay, here we go, right? So so you can see we had a sharp drop followed by the price channeling back to the origin of that move, okay, and that would act as resistance. Okay, so it's a trick. It gets you into a trade, and it's a very common structure. You'll see it happen over and over again. A lot of these patterns are on my blog in the manual section. Okay, and like I said, these patterns, they're independent from trend lines. They're independent from interpreting price moving through support and resistance levels. Really, they're tricks. They give us entry and they can help us establish a bias at a particular price. But these two patterns are some of the more common ones. All right, and so always looking for those. Some of the other ones which are a common way of interpreting price, and they're there more to kind of keep me out of trouble rather than anything else. I do use them for entry sometimes, but I have a pattern in the it's there in the manual. It's mentioned as type X, type Y, type Z, where we are trading between consolidation zones. So what you will notice, and this is more likely to happen during a trend, is that price trends, it consolidates, and then it trends again. It consolidates and it trends again. And so what happens is that whenever you have a consolidation, you're looking for a continuation trade rather than a reversal trade. Okay, and that's something which is very important, because what it does is it keeps you out of a lot of trouble. It stops you from trying to fight the price, right? So if we were watching gold, we could probably map that quite cleanly. It fell, it consolidated, it fell. We had a little pullback almost to the last consolidation area. It consolidated just under there, it fell, consolidated, it fell, all right, and we had a pullback, and again it's fallen. So understanding how price moves between these kind of consolidation areas, it helps you maintain a bias in the right direction. Again, it's independent from every other way of interpreting the price. We use it on its own independently, and sometimes it will be good to get you into a trade. My favorite setup on this is where the price breaks, it consolidates, it breaks again and it consolidates again. And sometimes you will see this happen. What happens is that the price will pull back to the last consolidation area, and then that will act as support. Okay, and you will get a move back up at least to the latest consolidation area from there. Right, so the very common price structures, they happen, and when you see price moving between the levels in that kind of way, it makes it really easy to interpret what's going on. All right, so really we've got three different ways of interpreting price. We've got trend lines, we've got support and resistance play, all right, which will either put us into the trend, or it will give us an early signal that there's a price reversal which is coming. All right, and after that we've got our patterns, which would be the consolidation zones, or the 3 Indians, or some of the other ones which I've shown you, and they're all on the blog site. Right, each one's independent. When you're looking at a trade, you just need to determine. 1 second, guys. Macy, shush, darling. Okay, right. So when we're looking and we're trying to determine what's happening on the chart, it's good to know which mode we're in. Each one requires us to wear a different hat, and I'd suggest that you start thinking in this kind of way.